If we started. Oh yeah. All right. Cool. Let me say something. Throw that out there real quick. Still messing with my new microphone. I was actually out over the weekend. I hope that makes sense. I have no idea. Hopefully the audio sounds good. It might be a little quiet, so for sure, feel free to turn it up if you have to, so you can hear me. Um, but other than that, I mean, I hope everything is good to go. Super low, bro. Hold up. I wonder how far. Hopefully that's not too much. Is the audio a little better now? That's probably still low. Check. Um, it's like yeah, I can hear you just really low. Yeah, might have to turn it up just to be honest. I have experienced this issue where like the recordings are really low, but if I listen to myself like on like max volume, shit usually works. But yeah, that's definitely something I'm gonna look to try to improve in the future. I don't know how people YouTube like for money, for real. Like they have to really buy like legit equipment. Um, but we're just gonna go like this. Hopefully I can speak up. Hopefully y'all can turn the volume up a little bit. Don't want this video to be too long just because I have posted some really like detailed charts on Twitter. But I did want to start out looking at this chart just to show you I was just on some bullshit. I did this like really last week. Um, you can see I have this annotation unsustainable growth. This was like, I mean, I guess it was serious TA, but it was also just like, I don't know what the fuck is going on. I'm gonna draw as many lines as possible. So you see, I have like this little wedge right here that broke down this trend line that kind of flipped resistance to support. This joint flipped from support to resistance. It might flip to support again, but whatever. The point is, I brought this chart up just to show you all like this was kind of like this growth curve that we were experiencing. Um, and we for sure cooled off and we've been going sideways. So, of course, like if you zoom out, uh, you can definitely probably still draw like parabolic growth. Um, but for the past couple days, I mean, we really just been going sideways. So the important shit, not this bullshit. I don't know if this is the right chart. Is this what I want to show? I have so many charts. Oh, that's a lot. I think this is the chart I want to show right now. Not even really, but this will be good. You'll get to see me draw it. But these purple lines right here, these purple lines essentially are kind of like the intraday support and resistance zones. You can see for the most part, most of the trading has occurred here, right between these two lines in this pink zone. And we have had some deviations that have occurred here. This was at the top of the run. This was a buying climax here. I think this was a sign of weakness in the trend. This was the first time the trend really had like a decent retracement, right? From this local low up until the buying climax, we retraced 50%. And we hadn't had a 50% retracement in any of this structure over here. And so this was the first time we actually saw some meaningful selling occurring. And then here we saw this, which is hilarious if you look at it on the 4 hour, because it's literally just a wick. So if you shorted this, if you thought this was a breakdown, I'm sorry. But yeah, so this is the range, the trading range that I really want to show off and let you know that you should be focusing your attention on hard breaks in either direction of this. Right now, I'm really concerned with hard breaks up, just because this area has served as solid support. You can see two 50% retracements. And y'all know, again, if you watch my channel or watch any of my videos, you know I like the 50 much more than any of the other fibs. Granted, 50 is not even a Fibonacci ratio; it's just a half the retracement. But I like 50. I start my fibs at 50. I literally go from 0. I don't really care about, what is it, 23.6 and 38.2. Sometimes I care about 38.2, but for the most part, I just go for 50. Sometimes I'll look at 38.2 just to see what's going on, and really don't have anything meaningful happening here. So again, that's why I just keep it off. But again, two great entries if you wanted to go long. Market gave you two opportunities to buy the 50% retracement, and 50% is lit. Also, you could have just waited for confirmation and then return to the level. So maybe you didn't want to deal with this. You didn't know if it was actually going to break down, but then you had this extreme pump. Well, what that left you with was this order block. It was very clear. If you go to the daily, I'll show you like how I found it specifically, if TradingView will let me. TradingView can be really trash sometimes. Oh, the disrespect. All right, so if you go to the daily, you don't really see a straightforward order block. 12-hour, don't really see one. You kind of see this doji right here. You might be interested in this range. No order block visibly apparent, or apparently visible. I don't know. Again, no real order block apparent. You can use these as a cluster. So you know, one technique I've shown for like drawing fibs is to take like the lowest wick, and then for bullish blocks, take the lowest wick and then put the top of the block on the candles that like based the little cluster formation. So in that case, it'd be this one. And as you can see, this would have been a great long entry here. But again, no like down move immediately preceding a strong bullish move. So don't really like that there. Also, real quick, let me, because this is not supposed to be here. I just want that on the 4-hour. Same with the. All right, but then you go down to the 1 hour, and I'll go all the way down to the 15 minutes to find a good order block. But then we go down to the 1 hour, and then you see this, and this is like ding, 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 perfect. You see this down candle right before a very strong bullish hourly candle, and so what you're gonna do is you're gonna draw your rectangle or your levels, just when you use two parallel lines, whatever, around this down candle. And what that does is it gives you a perfect long entry here. So you didn't want to mess with this area right here. You didn't quite know what the fuck price was doing. You're like, okay, is it gonna break down? Is it gonna, you know, I don't know what it's gonna do. But then it pops back up, and then you literally have, and I want to illustrate this because I think this is really important. People are so quick to try and hold a position before that down candle. You had 3 days, right? You had this up move, and then you had 3 days to find this one candle, which really only takes 5 minutes. Look you're you're gonna have to find which time frames work for you. But for me, I like daily, 12 hour, 4 hour, 1 hour, 15 minutes. Um, of course the weekly, but I'll drill down as low to the 15 minute, but using those intervals. And I mean, if you do that, you'll find the order block in less than 5 minutes. And so, literally, you have 3 days to look at this level and say, oh, wow, it's also in confluence with the 50% fib. This was an area of high demand because price always shot up out of here, did not like this price at all. And so, you have 3 days to literally set your orders here. You could put a stop under this low, it's kind of obvious, or you could put it like under this cluster. Maybe you see this as an area of support. That's kind of like pretty big stop loss. But maybe under this, like I said, previous local high from June 3rd. So maybe you want to put it here, and I'll zoom out to show you what I'm looking at. This line that goes all the way across. And then you put your stop maybe, under here, maybe under the 61.8. You allow it to retrace 61.8. And then you aim for these highs. And I mean, this is great. You can even aim for just these highs right here. Shit, that's ugly. But yeah, you can even aim just for these highs. You don't even need to aim for the top ones, just the top of this block. And you have yourself like a really good risk reward setup. You have a setup that's based on technical analysis. Your entry makes sense. Your stop is under resistance. To where a stop loss below here would be, a pretty good wick if it was a stop loss. You know. So that's just kind of how you have to look at the trade. You don't have to always be in a position. Just pay attention to the order blocks. Price will tend to retrace. Price will tend to retrace. If it doesn't, I mean, just move on, right? If price never came back down here and just floated and then popped up, you gotta live with that. The other thing I wanted to point out is this chart. This chart, definitely, I don't care. It's the best chart out right now on current price action. If you're not familiar, Wyckoff accumulation schematic, and then a Wyckoff distribution schematic. Oh shit. So I'll show you these if they load. But y'all know, really big on Wyckoff. Love it. Makes too much sense. Price really does three things. It goes up, it goes down, and it goes sideways. Wyckoff logic really helps you understand a consolidating or sideways moving market. Help point out some key characteristics of accumulation or distribution consolidation periods, and then help you better position yourself for a long or short trade. And so reaccumulation is interesting because what it'll look like is phase A will look like distribution, of course, because reaccumulation means that you're going up, and then going sideways and then going up again. So logically, what follows is that in reaccumulation, phase A is going to look like distribution because it's going up, and then phases B, C, D, and E will look like normal accumulation, and then price will continue up. Now, I'm not calling it, because one thing about Wyckoff you really have to understand fundamentally is like the whole point of it is to guarantee that you're on the side of the market and the smart money, etc., by waiting until phase D and E, right? You don't really want to trade A, B, and C. You do if you're a swing trader, or not a swing trader. That's not what I mean, but you are if you are like maybe a day trader and you want a defined range. Then A, B, and C tend to really define your range, and then C is where you'll make all your money in that predictable range. But other than that, for position traders and swing traders, you really want to wait until phase D and E to let you know the direction of the trend and then hop on then. But yeah, I'll go over this just to be thorough. Um, this is the preliminary supply. It's during an uptrend when supply starts to creep into the market, becomes apparent, becomes harder to make newer highs. You see a little more selling going on here, as you can see by this sell candle right here. This doji is a lot of good volume. Buying climax, that's when the buying has been exhausted. That is the last push by buyers. This is often where FOMO happens. People buying the local tops. This is when buying power has been exhausted. Because of this quick exhaustion at the end of this uptrend, everybody expected to go up, but then the trend got tired, or the market got tired, whatever, however you want to think of it. Then you have this automatic reaction, is what it's called. If it's accumulation, this is called the automatic rally, but for distribution, it's called the automatic reaction. So you have the automatic reaction, which is the first sign of not the first sign, but it's when supply really starts to creep in, and it's really more so the fact that there's not a ton of buyers, more so than there are a shit ton of people selling the top. Even though there are people selling the top, right? Best believe that. But this is really due to a lack of buyers because they just climax here. Then you have your secondary test, which is testing the highs towards the top of the trading range again, towards the buying climax, but it won't pass the buying climax, right? It shows a lower high in an uptrend, which lets you know the trend needs to cool off or go sideways, or essentially it's showing you characteristics that the market is no longer overtly bullish, right? And so after the secondary test, that ends phase A, and you'll see that here, right? After the secondary test, put a dotted line, phase A. Phase B is the longest phase, right? So this is where you really have to be okay with Wyckoff logic and really kind of, mix and match different parts of the accumulation and distribution schematics, and really understanding that they're just schematics, right? They're not like the gospel. They're just characteristics that you want to look for with that type of consolidation. That being said, I have a sign of weakness labeled here, which is a characteristic of distribution, right? It comes after the secondary test up, and it shows a sign of weakness, which is increased volume and increased candle spread down towards the bottom of the trading range, showing that supply is creeping into the market and is becoming a little more dominant. Not necessarily dominant over demand. I guess that defeats the point of the word dominant, but demand is still dominant, but supply is starting to creep in, right? And so I'm still asserting that this is an accumulation schematic, or again, I'm not calling it, but I think that makes the most sense given the uptrend. But I do want to mark out a sign of weakness in phase B, which I think this was, because we had this expanding volume on large candle spread below the automatic reaction, right? So we had the automatic reaction, came up, made the secondary test, flirted with this line, hard sell off, right? Now, there was a divergence on volume. Right here, price made a lower low on less volume. That's an easy bullish, signal, long entry, buy signal, whatever. So as soon as you see bears, right, they're in prime position. They're like, I really trying to think of a sports analogy, but like, I guess one is like baseball, right? Somebody gets up to the plate, they hit it, it's a triple, they're on third base, right? Next batter comes up, there's already 2 strikes, and then the next batter strikes out, and it's like, damn, we could have had another run, but this batter fucked up. That's very much what this is, right? This is Bears being in prime position to score and take the market back, And what they do is on their attempts, right? They just had success, and now, okay, next time up, time to take out these lows, and they do, but on this really shitty volume. And so it's like, Bears are gonna lose, right? Same way batter struck out, 3 strikes. Um, Bears struck out here, right? This was their opportunity to take the lows, which they were unable to do with conviction. Um, and that's why it was such a great long entry, because they did make a lower low, right? Not only with wicks, but with candle closes as well, but they were unable to do that on high volume, and so pushes that back up. But I do want to mark this as a sign of weakness because of the selling that occurred here, and I think that you all should take note of that. And then price got back up into our well-defined trading range, which is in the purple lines. I do want to point out that the preliminary supply, or if it's accumulation, the preliminary support is usually the pivot of the trading range. It's usually in the middle. And so this makes sense where we have this supply being recognized right here, end up, being the resistance for the rest of the trading range. We literally have been unable to close above this line on the hourly. And we come up here and we were flirting with it a lot. And this was pretty much a day trader's dream, where this was your resistance, this was your support, and we literally just oscillated here. And then here we had some funky action going on where we touched the support line, and then immediately next hourly candle we touched the resistance line. Both of these, it showed like a battle in the market, and we kind of faded off down towards support. We ended up dumping below it, and this is what we showed at the beginning of the video with the bullish order block right here. Touch support, touching the area of high demand. Price traded into a place where there were a shit ton of buyers. People who couldn't buy down here, who saw this candle and wanted to buy, were able to when price returned down here. And also, this annotation is old. I put this in last night, so all this hadn't occurred yet, right? So now we have good volume, right? I think this is what we might want to start considering a spring. We'll see. Price really traded below, but it happened extremely quickly, and price popped immediately back up in the trading range on high volume. And if you look on the 4-hour, that really just shows it even more so. Whereas here we were kind of lingering below the trading range, but here it was literally a quick wick on the 4-hour, right? And so now what we might want to look for is a test where we return to maybe this low. I'm not going to call this, it's very hard to tell, but this resistance right here, this would make sense if there were to be some type of strong test down, a wick down here, a very quick move down here, test, whole bunch of demand, buy this up, and then keep pumping up. But I think even like a test down to this support makes sense, as long as there's a good amount of buy volume or demand that comes in at support. But yeah, I think we might want to start considering this a spring, and I'm actually gonna go ahead and label it. And I may be wrong. We could totally like come back down here again, in which I'll look to the left and be like, okay, it wasn't a spring. But it looks very springy to me, and so that's what I'm going to put. And of course, as you all know, or if you don't, I'll tell you, the more times you test the level, the weaker it gets. The reason is because this is a supply zone. This is an area where there are more sellers than buyers. This is a line, a zone, an area where supply is dominant over demand, right? And so every time we touch up here, there's people selling. There's more people selling than there are buying. But when you keep doing that, you're going to eventually run out of sellers. And then there won't be more people selling than buying. Eventually, there'll be more people buying than selling, right? So every time it's like, okay, people sold, people sold, people sold, dump. Okay, people sold, people sold, people sold. Okay, people can only have so much to sell, right? Until this line gives up, and then the trend continues up. The only reason I'm partial to accumulation is because I'll lock everything down and zoom out. Clearly, this trend is up. Now, I'm not saying this can't be distribution. I'm just saying it doesn't look like it at the current moment in time, especially when you have a daily wick like this, where it's like, okay, this is clearly demand coming in. Um, but at the same time, you do want to be concerned that there's a lot of selling going on that's suppressing price, and ask yourself, why are people selling, and why are people so competent at selling too? Like, they're selling this resistance line. Um, this is pretty much the highest price they're going to get, so they're selling that pretty well. You might want to ask yourself why that's the case. And then the last thing I'll go over is pretty much this. As far as Wyckoff's concerned, I'll go over my write-up briefly. We kind of talked about most of it. And then I'll show you some indicators, and I mean, that'll pretty much be it. So yes, I say because like the short to midterm trend is up. Again, zoom out. This is clearly bullish. We want to give more credit to an accumulation schematic and distribution, especially when there are areas, visible areas of liquidity on high time frames. What I mean by that, let me see if I can find it on a better chart. I don't really know, but this area, wait, it might be better on this chart. So yeah, this chart. So currently price is here. Again, we're at this 3-day order block. Nothing is new. 3-day body of candle, draw to the right, resistance, easy money. Cool. So when I say visible areas of possible liquidity or liquidity on higher time frames, I'm talking about this is a high that once we dumped, we never retested and tried to clear this high. Maybe people have stops here. And also, and it's not really a high, it's like a retracement, but it sticks out. You know what I mean? Same thing here, right here with this, 3-candle formation, this pivot high. Again, people might have put stops up here. It sticks out as a little pivot point, swing high. And so people might have stops up there. We might want to consider trading up here. The market might want to consider that in order to take out some highs. We already talked about the volume. We talked about how bulls were unable to follow through. We talked about how trading towards the bottom of the range is typically a characteristic of accumulation schematics. As you can see here, you see most of the trading is done on the bottom of the range with a couple peaks up. And definitely the move right before the top is towards the bottom of the range, whereas distribution, most of the trading happens towards the top of the range, with most certainly the trading happen right before the extreme down move is definitely towards the top of the range. And the reason for that is because they're in accumulation. Smart money, people who know what the fuck they're doing, want to buy at the lowest price possible and then take price higher, buy low, sell high. Opposite for distribution, right? They want price to trade up here, and they're gonna keep price up here as people buy and they sell to them, only for them to take price lower, right? Sell low or sell high, buy low. Same concept, other way around. Other than that, go over some quick indicators. So here's the daily guppy. Slow EMAs have turned blue. You see they're pretty decompressed. Might want to look for a retracement here, but then again, the fast EMAs have not flipped bullish, or the slow EMAs, excuse me. The last time the slow EMAs flipped bullish, whew, I don't even know if I can find an example on different. All right, so the last time that happened, it kind of all happened at once, where both of them flipped. They got really tight and compressed, decompressed here, had a retracement, but the fast ones pretty much always stay bullish. Here was a little, I don't even know what you call this. It just fell below. But the slow EMAs never turn bearish. That's the important part. All the way up on the run to 20K. And so we might expect some slow EMAs to expand first before we get a really good retracement, even though we're getting a decent retracement now. On the 4-hour, pretty much perfect area to go long in towards the bottom of the slow EMAs. The fast EMAs have compressed, they're gray, and so we could feasibly see a very bullish move upwards when these decompress, because we expect the 4-hour slow EMAs to serve as a very steady, stream of support. Don't really want to look on the 1-hour, irrelevant. Here, the 12 and 26 EMAs, I know I like these. Now I have the 200 EMA here, the dotted line. 12 and 26 have served good support. Perfect entries here, deviated here, and then deviated here again with this wick. But remember, if you found the bullish order block, this was a great entry. And you see we're kind of flirting with the lines now. And on the daily, for sure, still very bullish. We actually tapped it on the daily wick right here, and so that's good. And so that's the 12 EMA. 26 is a little below it, and again, we actually, this confluence of the 12 EMA and the 200 daily EMA serves as solid support here. And so if your stop is under here, you're probably good to go for the most part. And then the last thing we'll talk about are, let's see, Peachy Cloud, which I know we haven't talked about in a minute, but I just don't use it. On the daily, I think, yeah, the daily, we're in the middle of an end-to-end trade or edge-to-edge trade where we could be looking here at 8.7, or maybe we'll just kind of teeter sideways and find support here at 7.866. In the cloud, lagging span above price, not above the cloud. Cloud still bearish. TK lines bullish. Forming C clamp, but not huge disequilibrium here. So I don't expect this extreme retrace. But totally valid if we retrace like the 7.5 to 7.3, right? I'm not gonna be mad at that. 12-hour, perfect bounce on the Tenkin line, which you'll see are other lines on different time frames. Cloud turning bullish on the 12-hour. I'm not going to go over it. Everything is bullish here. Only thing that's concerning is the C clamp forming with the Tenkin and Kijun line here on the 12-hour, which is just the daily cloud singled, as Josh or Carpe Noctem likes to point out. This is the cloud's way of telling you overbought or oversold. So you might want to consider this overbought. But Bitcoin's so volatile, I don't really know if I want to buy that yet. But again, a retracement down here to above the Kijun 7.3, 7.5, I'm not mad at. 4-hour instead of the Kijun or Tenkin, perfect bounce off the Kijun. And then the Tenkin is serving as short-term support here. It's actually starting to curve up if you see. 4-hour cloud bullish, lagging span kind of meandering inside the cloud or inside price, which lets you know we might be getting ready for a strong bullish move, right? Because last time lagging span was flirting with price, we ended up pumping, right? That was here. So here and here are the same places. I don't want to draw anything because then all my drawings will pop up again. But yes, last time we flirted with price, we pumped. And so now here we are again flirting with price with a bullish 4-hour cloud. So we'll be interested to see what that looks like. And this is actually the first touch of the Kijun line since we took off, right? Since we kind of went sideways, bumped into it and popped up. This is actually our first time touching it, which is, good healthy trend. I'm not going to go into the 1-hour. I mean, if you want to look at it, it's this is bullshit. So yeah, that's that. That is pretty much everything. So can't hear me. Hopefully, if, I mean, if I have to delete the video, I will, but might have to turn it up. But I will see you all later.